Today I want to explain to you guys the difference between the bull and the bear market. Understanding bull and understanding bear markets is how you're going to understand how people think and how bulls and bears affect an investor's behavior and sentiments. But I definitely want to talk about what a bull is and what a bear market is. So bear markets are usually when there is a 20% or more decline on the highs of a market. The bull market is when there is a high in the market, when stocks are going higher, bonds are going higher, everything is going higher in terms of the value of the market. Bear market tend to last shorter time, whereas bull markets last a longer period of time. So what are the good things about a bull? What are the good things about a bear? So investors invest on their money in different sectors. You as an investor, invest your money depending on what it is that you're going to need your money for. If you're going to need your money in 1 to 3 years, you want to be as conservative as possible. If you're going to need your money between 5 and 10 years, you're going to move maybe one risk level higher. If you're going to be needing your money at retirement or in school in 18 years, you definitely want to be a little bit more aggressive. So you reassess your portfolio based on when you're going to need your money. That's how I invest. Also, what's added when someone is looking at your portfolio, they definitely would they add in your risk tolerance. And, that means what is your stomach for the market, because you don't lose unless you sell. So if your risk tolerance is high, then you're able to just look at the market and say, I'm not losing until I'm selling. You just keep your money there and you let it ride. Then you might be a riskier investor, meaning that you're able to stomach the markets up and down. These days, anything is going up and down, so I can't tell you how to stomach that. But understanding markets are good because you can reap some of your benefits. You can reap some of the capital gains that you've made. For example, you bought a stock for $20 and it's now 100. You want to sell it and you're going to make $80 on that stock. So that's a good deal. Guess what? I bought Nvidia at $20 and it was, I don't know, $130 the other day. I should have sold, but I didn't. Not everything. Oh well. But I am ready. That money is something that I'm investing for the long term. I'm investing it for my retirement. I'm investing it for different stages in my life. So it's not the money that I need to pay my bills tomorrow. So even though the market is down, I don't know, 5,000 points this week, I am still holding on because I believe in the companies that I'm investing in. The bear market is when stocks have gone down, which I believe that we have tumbled into at the moment, is a bad thing because we've had a free fall. But there are good things about the bear market. For example, if you have been keeping cash on the side and now the market has lowered and you want to get into the market and start buying at the lower level so your capital gains would be more, that's one of the options with a bear market. That's one of the things you can do with a bear market. The problem is in this very uncertain world that we live in right now, and specifically this week of the uncertain times, it is hard to tell where the bottom is in this bear market. A lot of people thought, okay, yesterday was the bottom when the market was down, I don't know, 1,500 points. Then today the market opened and the market is down 2,200 points. So obviously today wasn't the low. Yesterday wasn't the low. We don't know when the low, which is where the bear is going to actually lie. So timing that to come in is one of the issues. What I suggest and what many financial advisors suggest is if you are wanting to get into the market, there's this saying that we have: buy low, sell high. Buy low, meaning when it's bear, sell when it's bull. So that's still the motto, buy low, sell high. So one of the key things about a bear market is you look for deals. It's like going to Macy's and knowing the retail value of a dress is $300. When it has VIP, it might be 30% off. But then there might be a sale, and then there might be a coupon where it's a 50% off. So that's the same with the stock market. Everything is on sale, but are you going to buy things that are out of style? So that's how you would look at it. If you're buying everything is on sale right now. Number one is that the lowest price of the sale. Don't you always get mad? I always get mad when I buy something and then I look at it the next week or two and it's gone down $200. So I might buy a necklace and then it's on sale and it goes down to a Effie sells necklace and it goes down $200. I get mad at myself because I should have waited until it's lower. That's the same thing with a bear market. You're buying now because it's on sale, but is the sale going to go further down? We don't know that. Based on what's happening with our markets right now, with tariffs, with the bears looking like there's a 60% chance of a recession, it is a very uncertain time. We have a president that speaks all the time, and every time he says something, the market is moving. Those are all very uncertain things, and we don't know. I still believe in, just like many other investors and financial advisors, that you should buy low, sell high, but I don't know where the low is. So depending on where the bear is going to go sleep or not, that's how we're going to know. So that's the difference between a bear and a bull market. Bear market is low, bull market is high. Usually the bear market lasts longer. Usually the bull market lasts longer and the bear market is not as long. But you can buy in a bear market. We just don't know how low it's going to go. So I can't really explain to you where we're going to stop bleeding at this point to start buying.